So, what are we going to talk about today when we talk about Elliott Waves? Well, first people want to know, well, what are they? Okay, where do they come from? And not unsurprisingly, we'll talk about, well, how do you utilize them in your trading? What is it that you're actually looking for? And we'll look at, right, well, how can you trade using Elliott Waves? We're all traders. We all want to hear. We want to understand different ways that we can both view markets and sort of interact and engage with markets that might provide us with our own personal trading edge. Then we're going to have a chat about, are they all they're cracked up to be? As I said, they're a fascinating subject, but they are also quite a controversial subject as well, and we'll touch upon that. And then if there's time, well, then what we'll do is we'll have a little look at Elliott Waves in live markets, have a little look at an ideas about how you turn the theory that we're talking about here, how you apply that in an existing market. So be sure to stay with us till the end, because I appreciate that it's always useful to, as I say, get the theory, but people like to see, how it sets up in a live market. Okay, so be sure to stay with us to the end. So I see I've got a few comments here and a few chats and stuff. So Robert says, he's never used them. Okay, and Phillips has said, has heard of them, but I've never used them. And that's probably actually Philip's experience is what I find is quite common, all right, for traders, is that, lots of people will have heard of them, okay? They will have heard of, the term Elliott Waves, but they have either, never really used them, never understood them, or maybe found them a little bit complicated or a little bit intimidating. Well, today's session is, it's quite an in-depth subject, and we can't go into that. We're limited a little bit by the sort of the time we have available, but what I'm hoping for is by the end of this session is that you'll have just a good enough understanding what it means when people are talking about different types of Elliott waves, and hopefully you might also be able to identify where the market is in what its particular wave count it is, and just a couple of sort of good sort of rule of thumb concepts that you can take away to apply to your own trading in terms of helping you understand and analyze the markets that you particularly trade with. So by all means, if you've got thoughts or comments, put them in. I don't consider myself an Elliott wave specialist, but I understand them enough, okay, to be able to explain them, and hopefully, as I say, you'll be able to take it away and sort of build that into your own trading style, into your own terms of sort of style of trading analysis. So as always, my name's Paul. I've been trading for many years now, okay, and primarily, I like to trade FX indices and commodities for myself, and primarily, for sort of swing and position traders. I'm looking to be a trend trader, and I tend to trade reversals and mean reversions for shorter term trading. That's the way I like to operate. And here at Admiral Markets, okay, as you can see, there's a wide and broad range of financial instruments that you have the opportunity to engage with. They have, a sort of real global reach, and they're licensed and regulated in various regulatory environments across the globe, providing competitive spreads on the most popular trading products and allowing you to engage with markets using both MT4, MT5, and also Admiral Markets' own Supreme Edition. So if you have any questions about that, then by all means get in touch with your account representative, and they'll be happy to help and guide you. But as always, ladies and gentlemen, we're here to talk about trading, and in particular, how to trade using Elliott Waves. So, as it says there on the slide, Elliott wave theory is a powerful tool in many traders' toolbox. However, they do require some study to be able to understand and use them, and that is very true. Okay, and that is a theme that we will go through the entire session of them today. So, I suppose that question is, do you know how to trade using them? Do you use them yourself? Well, I know we've had a few answers there, but as I said, if you've never really even heard of Elliott Wave, you've sat there sort of shrugging your shoulders, a little sort of wave of the head. That's absolutely fine. Hopefully, by the end of it, you'll be able to sort of try and maybe condense it into something, just some kind of simple concepts you can take away and utilize in your own trading ideas. But if you want to break it down, Elliott wave theory, it is a form of technical analysis that traders use to analyze and quantify particular price patterns. And in this introductory session, we're going to learn how you can use them in your own market analysis and trading setups, and how to apply them to many different markets. And as I said, it's Elliott wave. You could spend the whole month, okay, studying various types of Elliott wave. Today's session is just going to be an introductory one that will help, hopefully, sort of demystify it, and also enable you to sort of just basically understand the basic concept of it. Okay, that will help you in your own understanding of markets and trading. So, if we're going to learn how to trade using Elliott waves, probably wouldn't be a bad idea to sort of, understand them a little bit more and try to work out, where do they come from. Well, as the slide is saying, that about nearly 100 years ago, they were created or discovered by an accountant, okay, by the name of Ralph Nelson Elliott. So you can understand now where he gets the name. He discovered after studying stock market charts that markets do not act in as much of a chaotic behavior as we may think. And that's kind of, one of the elements that is open to debate, okay, by traders and investors, well, ever since, amongst many other subject matter. He believed that markets traded in repetitive cycles, which he published in his book, which was called The Wave Principle. So maybe you now start to get an idea of why they've sort of acquired the name they have. These cycles were a reflection of human psychology or external influences, and he called these movements waves, and so was born wave theory, ladies and gentlemen. And I think, we could go back into the history and everything, into an nth degree. I suppose the interesting thing for me and what I'd like you to take away is understand is that these cycles are a reflection of human psychology or external influences. Okay, that's the key element to take away. Okay, and that's the thing we want to sort of try and understand. And that's what I'd sort of be suggesting maybe to sort of say for completely new traders, that is where a starting point for your own understanding of Elliott waves may come from, is that really just recognizing that these cycles, they're a reflection of human psychology or external influences. Okay, and if you can just start to sort of let that idea germinate, well, then it'll help you make a bit more sense of just market movements in particular, and that might help you in your own understanding of of how and why markets move. So, where did these Elliott waves come from? Well, Elliott believed that if you can correctly identify the repeating patterns in price, then you can accurately predict where price will move to. And, and in doing so, you had a means to identify possible tops and bottoms in markets. And so from this, Elliott wave theory has become commonplace amongst many traders. I suppose that question becomes, are you ready to become a wave counter yourself, ladies and gentlemen? And I suppose this is, as I said, Elliott wave is it stirs up a lot of debate, all right, amongst traders. Okay, it stirs up a lot of debate. That's probably the best way I can describe it, because as he says that he believes if you can correctly identify the repeating patterns of prices, then you can accurately predict where price will move to. So, that is based upon you being able to correctly identify the repeating patterns in price. And that is not always as easy as you find in a textbook. Okay, most of you will have seen markets, all right, and the best will in the world. It's great to see particular trends and particular moves, but equally also there is markets spend a lot of time consolidating, range bound, and chop, however you wish to describe it. Okay, and so if you want to accurately predict, you have to be able to correctly identify the repeating patterns, and they are not always as clear cut as we would like them. Okay, the market is, as I said, remember, it's a reflection of human psychology and external influences, so it's not always as clear as we would like it. But that happens enough to actually have some legitimacy and to be able to be useful to understand. Okay, moves when we particularly see them. So, as I said, it all is about you becoming a bit of a wave counter. And I appreciate that if you're completely new to trading, you're probably thinking, what on earth is all of this? But bear with us, ladies and gentlemen, stick with us. We will be revealing it slide by slide as we go through our particular session. So, and here's, like I said, here's a couple of the sort of kind of rule of thumb, okay, ideas that you should take on board if you're trying to understand Elliott wave theory. If we talk about what would be known as impulse waves, okay, Elliott believed that the markets moved in an 8-wave cycle, which was broken down into a 5-3 wave pattern. Okay, the first 5 waves are called impulse waves, and the last 3 waves are called corrective waves. All right, so 8-wave cycle broken down into sort of 5-3 wave pattern. First 5 are impulse, last 3 were called corrective. What you do, and we'll show you on this next slide, is that waves 1, 3, and 5 are motive because they go along with the overall trend, and waves 2 and 4 are corrective. So just to bear that in mind. Just take that on board for the moment, ladies and gentlemen. Okay, and we'll look at that now. So This will hopefully help make things just a little bit more explanatory for those of you who've maybe struggling trying to sort of grasp the concept about Elliott waves. So remember what he said. Let's bring up our drawing tool here. That always helps us, doesn't it? Okay, so here we go. So remember, we talked about it being an 8-wave cycle. All right. So as always, every week, ladies and gentlemen, I say I apologize for my artistry. Okay, I'm a better trader than I am an artist, so bear with me. But hopefully, you'll get the gist. So 8 waves broken down into 5 and 3. And so here we have the first 5. Okay, let's just get our drawing tool up again. So we have wave 1, wave 2, wave 3. Wave 4, wave 5. Okay, 1, 3, 5. This is the impulse move. Okay, that's the impulse move. And then the last 3, okay, they're not termed with numbers, they're termed with numerals. We have A, B, and C. Okay, so we have an 8-wave cycle that is made up of 5 waves. Okay, the first 5 are impulsive. Okay, and then the sort of last 3 are corrective. Okay, the last 3 are corrective. However, and this is where sometimes where people get themselves confused. Okay, this is where people start to trip themselves up. You have waves within waves within waves, which we will touch upon in greater detail in a moment. But what I just want you to try and grasp and understand is that very often, okay, a good move will be made up of, let's just move this here, let's get the tool, will be moved up of 5 waves up, 3 waves down. Okay, 5 waves up, 3 waves down. Okay, that's what I just want you to try and understand, and that's where this might actually be useful to you when you're starting to do quick analysis of particular markets. Okay, so remember what it said is that waves 1, waves 3, and waves 5, okay, are motive, right, because they are in line with the trend, whereas 2 and 4 here, okay, they are corrective parts of a bigger impulse wave. Okay, so that's the thing to sort of just to take on board. All right, go 5 waves up, 3 waves down. 1, 2, 3, 4, 5, A, B, C down as the corrective waves. Okay, and that's it. And this is what happens is, and this, as I said, this is what traders can find themselves getting tripped up when they're sort of just learning and understanding, is that actually this can be part of a much bigger wave. Okay, this 8-wave cycle could be on the on the 1-hour chart, but it's actually part of a much bigger move that might be happening on the daily or the weekly chart. Okay, it could be a bigger wave pattern growing, and that's why we're looking here. We've got, so just you can see here, we've got 1 and 2 here. Okay, so this 1, 2, 3, 4, 5 might be part of a bigger wave. Okay, and ABC could be part of that could be a wave 2 as part of bigger wave 2. Okay, and as I said, this is sometimes where people get themselves tripped up. They can sort of trip themselves up. They can fall over because they start to sort of just get lost or a little bit confused, working out where is which wave am I in, and which kind of in terms of which count am I in, and it becomes quite a can be a little bit confusing. Okay, and that can be even confusing for people who understand Elliott waves very well. But as I said, what I just want you to understand, okay, to take away, is that normally it's an 8-wave cycle, 5 up, 3 down, or 5 down, 3 up. Okay, and what we are looking at here is you're looking at 5-wave up, which has 3 motive waves, 2 sort of mini corrective waves in waves 2 and 4. And then after you've reached that top, okay, and remember this is where people are expecting there might be a top here at the end of wave 5. Well, then invariably you start to see you'll have 3 wave down. Okay, an A, a B, and a C. Okay, and that's the important thing. All right, just being able to understand that. And for the moment, for new traders, I'd be saying, whatever the time frame you particularly look to trade on, that is what you're looking for. If you can just identify that within the time frame that you primarily trade on, whether it be a 15-minute chart, a 1-hour chart, a daily chart, a weekly chart, 4-hour chart, whatever it is that you particularly prefer to focus on, if you're able to identify these patterns there, okay, when they show up, well, then that allows you to sort of be in a better position to understand where you are in the wave count. And that's what actually traders are trying to do. They're trying to understand, can I work out what the wave count is? Okay, and by doing that, well, then they believe they're in a position to start to identify turning points, okay, particular turning points. And if they understand what particular wave they're in, well, then they can get ready to position themselves accordingly. And we'll touch on that a little bit more in the next few slides. So in terms of talking about how to trade using Elliott Waves, as I said, it kind of helps to understand the wave count itself. So let's bring up the old drawing tool here. And what we've got here is wave one, okay? Wave one is normally the initial move, and it usually has a small number of traders involved, okay? Wave one might possibly be a breakout. Could be a breakout of something, or it could be a breakout of a range, could be a breakout after basing. But what we normally see is it's the initial move, right? And it has a small number of traders involved. Then you'll get wave two, all right? And what happens here is that happens when traders believe the initial move is overvalued, and so they take some profits. And so price, which has been, moving up here, okay, starts to come back, all right, starts to fall back. Wave three, okay, then buyers step in, wave three, and this is, this is kind of a normal, it's not always, but it's normal. The wave three is normally the longest and the strongest wave, all right? And this wave should exceed the high created by wave one. And we can see here, this particular one, wave three, is, it's a longer, stronger move. It's certainly, okay, it certainly basically exceeds the high created by wave one. And then once again, there's always somebody somewhere taking profits, and that's what creates wave four, okay? So where traders take profits because they believe the instrument is too expensive, so they take profits. But remember, ladies and gentlemen, there's always there's always three parties, okay, in a trade, right? There's the buyers, and then there are the sellers, okay, and then you've got the people sat on the sidelines, okay, the people who haven't committed for one reason or another. And very often, some of those people are what create wave five, because the people who've missed wave one and three, they now buy the instrument, okay, and the instrument gets driven north by hysteria, okay. This is normally kind of the last push, all right, the last people to the party. And if you've heard me talking about trading before, okay, you'll always say you don't really want to be the last person to the party. But if you can identify, all right, if you can identify when the last people are to the party, that can be a very useful tool to have. And so if you're able to identify this kind of five-way impulse waves, okay, well, then that actually puts you in a particularly good position. And once we've had that kind of move up and that kind of end of wave fit, well, that's where the instrument is overpriced, and it's where contrarians start shorting the instrument, which starts the ABC pattern, okay, the final three waves of the bigger 8-wave pattern. So, as I said, it's just about starting to understand, being able to understand the wave count, recognizing it, okay, when you see it, it's not necessarily always there. Sometimes it's very hard to see, but once you can see it, well, and if you can very accurately identify where you are in the wave count, well, then you are you're in a space to be able to predict where possible turning points occur and what possible next moves may be. And that just gives you an opportunity to start to build a trade plan, all right? And that's invariably where traders want to get to. So, as we said, once we've hit the end of wave five on the impulse, well, then you'll need to understand the counter trends, okay? And these, of course, are the corrective three waves that occur after we've had kind of the 5 waves up. Okay, 5 waves up. And as you can see, we use letters, all right, are used instead of numbers to track the correction. And it's quite simple, as you can see there. After the 5 impulse waves up, we have our first wave A, corrective. Then within that corrective wave, we have wave B, which is a corrective wave within the counter trend, followed by wave C. Okay. Now, as you can see there, if you wish to study that further, well, then, according to sort of Elliott and his particular theories, there are kind of 21 variations on corrective ABC patterns, all right, which he rates from simple to complex. So today we are just doing very simple, all right? It's an introduction. It's hopefully just an idea to help you understand the concept and see where you might actually be able to use it in your own trading. You might have actually, having looked at just those previous slides, you might actually have just something clicked for you, something resonated with you, saying, well, crikey, I actually see that most days in my usual trading as it is. You're seeing how we kind of make 5 waves up followed by 3 waves down. And if you can just understand that, now you can start to basically put a label on it, you can start to understand it, and you can start to recognize how it happens and when it happens. And that in itself can be very helpful for you. So, as I kind of alluded to a little bit earlier, is that Elliott waves are fractal, all right, and it's entirely possible for each wave to be made up of subwaves, all right. So, in an example here, you can see how waves 1, 3, and 5 are actually made up of smaller 5-wave impulse patterns, whilst waves 2 and 4, all right, are made up of smaller 3-wave correcting patterns. And as I say there, this can be both a blessing and a curse, all right? It can be both a blessing and a curse, because when it's very clear, it's very easy to see. Unfortunately, it's never as clear as we want it to be, as often as we want it to be. Okay, and welcome to trading, ladies and gentlemen. All right, but as with most things in trading, the more you practice it, okay, the more you practice this in your sort of chart analysis, build it into your process, just trying to even just question yourself, okay, as you're doing your analysis, just question yourself of, right, what wave count am I in here? Can I see the wave count? Just even that just causes you and drives you towards being able to sort of, identify and see, what, if any, particular wave count can be recognized. As I said, because once you start to be able to recognize those wave counts, well, then you're in a position to identify possible turning points. And that becomes kind of useful to us as traders. If you can identify where there are possible turning points or where there might be particular legs, well, then you are in a position to try and actually sort of take some part in that. And as I said, this is sometimes where people get a bit confused because, as I said, Elliott waves are fractals, and being able to identify waves within waves within waves, that can be, without a lot of practice, that can be quite challenging for new traders. Okay, and that's why I was saying to begin with, to start with, if you can identify where you see that 8-wave cycle on the your primary trading chart, well, that is a good starting point. Okay, that is a good starting point. And then with experience, well, then you'd be able to identify whether it fits into a much bigger pattern. And you can see here with these names that and there are there is an Elliott Wave group, an Elliott Wave International, who just focus specifically, okay, on just studying everything via Elliott Waves. And you can see there they have names for grand super cycles, or ones that are almost like multi-century wave patterns. Okay, super cycle is a mere 40 to 70 years. A cycle is 1 year to several years. A primary, okay, is a few months to a couple of years. An intermediate is just counts in weeks to months. A minor is weeks. A minute is in days. Minute is hours, and subminute is for waves that you'll see within minute charts. And that's it. You will see that. Okay, once you can start to see this kind of 5 up, 3 down, kind of 5 impulsive, 3 corrective, excuse me. Well, then you will be able to see them across different time frames, and you will see that that they do reflect. They do reflect, and when you see them moving, well, that is invariably it's to you're in a position to sort of take advantage of that. So, how do we start to trade using Elliott Waves? Okay, how can we use this information to help us make better trading decisions? Because that's what we're really looking towards. Okay, well, it helps if you have some 3 simple rules to help you confirm if you have Elliott Waves in place. So, here's a couple of 3 simple rules that you should follow to just make sure that you are properly, aligned with the wave count. First one is wave 3 can never be the shortest impulse wave. Okay. All right. Remember what I said a bit earlier? The wave 3 is normally the longest and the strongest. It's not always, but as a general rule of thumb, okay, wave 3 should be the longest and strongest, and it should never be the shortest impulse wave. Okay. Second rule, wave 2 can never go beyond the start of wave 1. Okay, so you can't have a wave 1 up here, wave 2 that comes down beneath the low of wave 1 before it moves up. That's not a proper Elliott wave, an Elliott impulse wave. Okay, wave 2 can never go beyond the start of wave 1, and wave 4 can never cross in the same price area as wave 1. So what that would mean is, if you're looking at the kind of same sort of price area, what you don't really want is, wave 4 coming back down into crossing into that particular area. Okay, that's not what we're particularly looking for. So when you're looking at charts, okay, and you're looking at price action, even if you can just hold in place the fact, understanding 8-wave cycle, okay, 5 impulse, 3 corrective, those 3 rules. Wave 3 can never be the shortest wave. Wave 2 can never go beyond the start of wave 1. Wave 4 can never cross in the same place area as price 1. Well, if you can just even that, just those simple rule of thumb, okay, well, that will put you in a much better place to help you with your own particular market analysis. That will just help you, just give you a good, as I say, rule of thumb that will keep you on the right side and allow you to effectively just start to do a bit smarter analysis of your particular favorite trading markets. And as I said, the element of it is it's about practice. Okay, this is something that needs to be practiced at, okay, until it becomes automatic. All right, and as I say, it's markets are not always clear as we would like them to be. That's the nature of the game. But once you start to be able to recognize the, those kind of 5 and 3, 5 impulse, 3 corrective, it will help. Okay. And as always, the more you practice at it, the more it becomes natural to you, and you'll start to see where and when that actually occurs. So, I suppose this is linked into a couple of comments we said before, is that, are they all that they are particularly cracked up to be? It's a case of, Elliott wave is easier when you've identified the correct wave count. Okay, and that's absolutely right. But also, Elliott wave can be challenging when you've misidentified the wave count, right? Which is also very possible. Okay, and as I said, the answer is deliberate practice. All right, deliberate practice, and that's it. So. Philip says, will this be of help to identify the start of the next sequence? And that's a great question, Philip. Thank you very much. So identifying what you'll find here, identifying the start of the next point 1, it is unlikely to help. I'm not saying it will never, but it is unlikely. So what you will find is that you will find lots of traders, okay, will either try to identify, okay, once they've seen point 1 and point wave 2 happening, well, then actually they're looking to try and capture wave 3, okay, capture wave 3, because, and remember what we said, wave 3 is very often the longest and the strongest, is because traders may have seen something like a breakout occur. Maybe there's a breakout, all right, breakout of a particular range or a base, and they identify wave 1, they see the wave 2, and then they basically look to position themselves to join wave 3. Now, some traders will actually just look to try and trade wave 3, and they will be happy with that. Others would happily, take their long position, hoping that they know that at some point there will be a pullback, at some point there should be a wave 4, and will actually try to sort of hold the position and try and ride to wave at the end of wave 5. There are some other traders who, as I said, remember, wave 5 is often when there's just, lots of people who have been sat on the sidelines who are kind of rushed towards buying, okay, because they've missed out on the earlier action and they just want to be on board, and so there's an awful lot of hysteria in wave 5. But equally also, some savvy traders, okay, will recognize they might have been able to identify the sort of the 4 waves beforehand and might be able to say, well, they might trade wave 5, but they know that wave 5 is going to come towards expecting wave 5 to come towards a peak. So they are also quite, how would you say, they're quite flexible, okay, they're quite sort of understanding that wave 5 isn't going to go on very long. It's if we've had a wave 3, well, it's certainly not going to go on as long as that. And so they would be very how would I describe it? They would just be flexible, okay, about their position, and understanding that at any point we could get wave 5 in towards an ABC corrective. There'll be other traders who would actually sort of, excuse me, would maybe recognize that they're in wave 5 and would actually be looking to say, well, actually, this helps me identify the top, which would allow me to sort of trade the ABC correction. Okay, so as I said, with a bit of practice and a little bit of guile, a little bit of savviness, you start to be able to sort of identify where the possible opportunities are. But certainly, lots of traders, okay, will try and trade the wave 3. Okay, that's what they're ideally looking for. Okay, ideally what they're particularly looking for. Hope that helps a little bit there, Phillips, with that. It was a good question. And Jan says, what's the best period to use Elliott wave theory? 1 hour, 4 hours? That's a good question as well, Jan. My own personal opinion would be that to start with I'd start with, if you already have a particular trading time frame that you work on, that you're comfortable with, I'd say, suggest starting with there, okay, because you probably have some experience, you've probably already been doing some analysis of it, and what might happen is, by being able to understand this, that might actually just give you just a little bit of further insight. It might just give you a little bit of a kind of light bulb moment, that you see that actually you've been, Elliott waves have been happening all the time. You just didn't know what they were. You just didn't know how to label them. So that would be my first preference. If you're like new, if you don't really know what your particular trading preference is, well, then I'd probably start with the daily chart. Okay, daily chart has the most eyes on it. Okay, there's lots of people sort of looking at what's going on the daily chart, and it just gives you plenty of data, plenty of data to go back and look at to basically get a good picture. So that's how I'd be suggesting you to look at that to start your practice with. Yeah. So here's a chart. This is pound against Canadian dollar on the daily chart. Maybe some of you can already see the kind of 8-wave cycle in there. Maybe some of you can't. Okay, so it's let's have a little bit particular look at this. Okay, and this is an interesting one in the sense that it's equally, there's some nice parts of it. There's also some scruffy parts of it. Okay, and it's trying to work out and identify how we see that in trading, because the charts are all what the charts are. And what we have here is it's effectively we've got from a start here with a really big key reversal bullish. We have a wave 1 here. Okay, we then have I'd be looking at that as that is a wave 2. Okay, which happens to be a flag pattern. Fancy that. Remember, wave 2 can't go beneath wave 1. Wave 3 then, okay, we'd have here is wave 3, okay, which is kind of it's a long wave, and then we have wave 4 here, but it is it's not particularly, it's more of a sort of a sideways move rather than a retraction. As I said, wanting to show that it's not always perfect. Okay, it's not always as easy. Following by the last wave, okay, which is wave 5 here. So let me see, as I said, excuse my drawing as always. So hopefully you can see we have like 1, 2, 3, 4, 5. We've got 5 impulse waves. So some kind of clear 1, 3, and 5 are the motive waves going with the trend. And then what do we have here? Okay, we have a corrective wave. We have A. Okay, then we have B. Then we have C. Okay, so there we go. A, B, C. Okay, so as I said, looks a little bit scruffy. Doesn't look immediately sort of leaping off. Wave 4 looks it looks a bit complex, a little bit scruffy. Okay, but what we can see there is that that's part of, like, there's 8 waves there. Okay, and that's what I want you to be able to understand. Okay, 8 waves, 5 impulsive, 3 corrective. Okay, 1, 3, and 5 should be motive with the trend. Wave 2 should never go beneath the start point of wave 1. Wave 3 is normally, not always, but normally should be the longest and the strongest. Wave 4 should never come back down into the area of kind of wave 1. And then, as I said, 5 up, 3 down. Okay, and I said some of you might have seen that straight away. Others might, have been a little bit bewildered, and that's why I say you just need to practice. Okay, just practice time and time again. That will help you enormously in trying to understand and be able to identify what we're particularly looking at here. So, in conclusion, ladies and gentlemen, Elliott wave theory was created by the accountants R. and Elliott nearly 100 years ago. And Elliott wave theory is a form of technical analysis that traders use to analyze and quantify price patterns. He believed that markets demonstrated more order than people realized, and that market movements reflected external influences and crowd psychology. And that is, as I said at the start, that's a key thing to take away, okay? If you can understand that, that will help you in your own trading endeavors. These moves could be identified as waves, and those moves happen in 8-part waves broken into 5 and 3. 5 waves in an impulse move, followed by 3 waves in a corrective move. When it comes to trading using Elliott waves, remember those sort of 3 simple rules. Many traders try and catch waves 3, 4, and 5 along with corrective wave C. But as I've said many times through it, is lots of practice is required to count waves correctly, and that's the key thing there. So we've got a few minutes left. So what we'll do is we'll switch across to the charts and have a little look at what's going on there. See if we can identify anything at the particular moment. But as always, if you want more help and support, well, then you can come and join us on the Trading Spotlight community, okay? There on tradersyard.com. The Trading Spotlight group is tradersyard.com/group/312. My assistant will probably put a link in the chat box there for you as well. And as I said, I'll be in here for the rest of the afternoon, okay? So if you've got particular questions about this or maybe about other particular trading ideas or challenges that you're looking at, well, it allows you to get some support after the webinar. You see, my colleagues Marcus and Jens, they're posting fantastic material there every day. They really are exceptionally good at that, and there's always fascinating elements in there to see. And also, you can get the recordings of any of the elements that you particularly missed. And don't forget to join us next time, okay? You'll have my colleague, Marcus from Admiral Markets, and he's going to talk about how to build a perfect trading workstation. And he'll cover, why your trading workstation is important, the ideal setup, for hardware, and the ideal setup for software. So that'll be at Wednesday, 29th of July, 2 o'clock London time. Check your inbox for the webinar link, or you can find it on the admiral.com website. And you'll find that there's lots of analysis and education and tools and resources on the admiralmarkets.com website, as you'll undoubtedly understand. And if you want to contact us, okay, if you've got questions, okay, then, contact us hello@admiralmarkets.com if you have any questions. Or, as I said, if you're watching this on YouTube, you can watch it on the youtube.com/admiralmarkets. And also, if you like it, if you find it helpful, please give us a like, okay? If you've got questions or if you've got even suggestions for future topics, please, by all means, drop them in there. We'll be happy to take that feedback. And as also, you can find us on facebook.com/admiralmarketsglobal. So I hope you found that useful. I hope you found it interesting, okay? As I said, it's supposed to be a little bit of an introduction. Hopefully, it's maybe just demystified the Elliott wave theory for you a little bit, just giving you enough to basically understand. As I said, we've got a couple of minutes left, so I'll just switch across to the charts, and we'll see if there's anything we can have a little look at that might be setting up at this particular moment. So if you just bear with us for a moment, we'll switch across to the charts. Okay, so hopefully you can still hear my voice and see me. Hopefully you can still see the from the charts. Okay, and what am I looking at here? This is the dollar Canadian on the 4-hour chart here. Okay, and I'm just going to put this down here and just using my drawing tool, and hopefully just maybe get a little bit of an idea of of when we see the waves happening. And what we've got here is, when I look at this here, I particularly sort of kind of just look at this as this would be for me kind of a wave 1, followed by a very scruffy wave 2. I would look at that as, and then we have a kind of a strong wave 3, followed by a kind of very small wave 4, followed by a wave 5, okay, to the top. So you'd have 1, 2, 3, 4, 5, okay. And then what we have here is, we have, a corrective wave. There'd be A, followed by B, followed by C. Okay, so let's just try and draw them in. Okay, so as I said, hopefully you can see that it's something you just need to practice. And it is a kind of, to begin with, it always looks easier in hindsight. But as I said, what you're looking to try and identify is, for most traders, if you can start to identify waves 1 and 2, well, then you might be in a position to buy into wave 3, or if you're smart, you might be able to trade wave 5, or very often you might be able to trade wave C, okay, which is something I personally trade myself, okay, because it gives you also then have double tops, lower highs there, okay, and there's going to be a corrective wave C coming down there. So that basically it's this, as you start to see particular ideas coming together or melding, that gives you the idea of how to just do that little bit of analysis on your particular market. So that was that's dollar against the CAD on the 4-hour. Let's have a look. I think euro yen was kind of interesting. Euro yen was kind of interesting here, and it's just that it's not really what we're particularly looking for, in the sense that it's you get excited about it, but you're looking and thinking, well, okay, is this what has been going on here, just to show that actually sometimes it just doesn't, and so some traders might have actually sort of just seen here, okay, this as this kind of as a wave 1, that's a wave 2, this is a wave 3, this is a wave 4, okay, and then this is a wave 5, okay, before it has an ABC corrective wave there. Hopefully you can, whoops, no, B there, C there, I do apologize. Hopefully you can see that. So wave 1, wave 2, wave 3, wave 4, wave 5, okay, followed by an ABC, which, it would have been nice to see, nice to be able to see and understand. But there would have been some people who would have been perhaps just looking at this, saying, well, okay, maybe this is a wave 1, this is a wave 2, this is a wave 3, okay, and then you have this is kind of a big wave 4, which it hasn't come into wave 1 before this is a wave 5 itself. So that is personally, that's the wave 4 and 5 is just not really whilst it meets it, it's not particularly. Wave 5 should be like wave 4 to have been short and move up, and it be clear and to kind of leap off the chart. But as I said, sometimes these things are not in any way as clear as we like. That's trading, but it just allows you to help you make a little bit of sense of what's going on. And if I have a look at is Euro Daily doing anything? Well, you'd be looking at that, sort of looking at that presently, saying, well, this is going a little bit hysterical there. Is this a case of, is there a case of here, that we've had, a wave 5 there, okay, a very messy sort of wave 4, kind of followed by a kind of very strong wave 2, wave 3, my apologies, followed by like kind of a wave 1 there. I've not drawn it terribly well there, but wave 1, wave 2, wave 3, a very complex, messy wave 4 before that kind of push of wave 5. And as I said, normally 3 is the longest and the strongest, but it's not always the case, and some people might look at that and say, well, actually, Paul, no, what you're actually seeing is, you're seeing this, that's wave 1, that is wave 2, and we're actually just starting wave 3 now as part of a bigger cycle that might be occurring. So as I said, it takes a little bit of practice, okay? It is taking, just open those charts, look at what you're trading at the moment and see, can you identify those kind of 5 waves up, okay? The 5 impulse waves followed by the 3 corrective waves, all right? And with practice, that might just help you just make a little bit more sense of charts when you look at them, making your own trading decisions. So as always, I hope you found that useful, ladies and gentlemen. As always, I wish you the best of success in your own trading endeavors. And I look forward to speaking to you soon. And for those of you, I'll be in Traders Yard for the afternoon if you want to ask us any questions. And until then, trade well, everybody. Thanks very much.